The footnotes themselves are an integral part of the financial statements and the reporting, and they are required material to be included with the financial statements. So if you're looking at a balance sheet, income statement, statement of operation, and cash flows, and you're not looking at the footnotes or you don't have access to the footnotes, you need to get them to review them. It's an important part of the overall financial review process. And rather than go through the detail of each one of those footnotes and the structure, I will tell you that they are consistent in structure, and the way they're put together, they're going to appear somewhat similar from one year to the next in terms of financial reporting. But there are a couple you might want to pay particular attention to. The first one would be footnote number 2, and that deals with the statement of accounting changes or errors in financial statement reporting. And so that footnote is going to alert you to the fact that the company might have made an accounting error in their prior financial statements, or there's a change through an audit adjustment. If that's the case, it's going to appear in footnote number 2. It may not give you all the detail, but it will at least point you in the right direction and basically alert you to the fact that you've got something you need to look at on those financial statements. Another footnote you might want to take a look at is footnote number 10, and that's information concerning a parent, a subsidiary, or an affiliate. And this is important because if you've got a group of companies that have changed their structure, maybe they've added another property casualty insurance company, maybe they've acquired another company, something about their corporate structure has changed. You may want to take a look at that. It should provide you enough information in that footnote to make you comfortable with what you're looking at with respect to that company's financial statements. Because if that company is part of the group and they own a part of a company from that group, it's going to be reflected in their financials. So if there's change in that structure, that's something you probably want to look at and pay a little bit of attention to. Footnote number 14, contingencies. This is pretty standard stuff between GAAP and statutory accounting. So you're looking at anything that might be a potential future obligation to the company, and perhaps it's not mature enough, it's not at the stage where they can recognize it on their liabilities section of their balance sheet, but yet it's out there, it might be lurking in the bushes. If it's reasonably estimatable, if it's material, you're going to see it in this footnote. It's going to be reflected here. It may not have a lot of information, but it will at least be noted and you can take a closer look at it. Number 22, footnote number 22, and those are the events subsequent. And here again, not a lot of distinction between GAAP and statutory reporting. What you're looking at here is the company's got an opportunity to put anything that's a subsequent event, level 1 or level 2, out there on its financial statements to report to the user of those financial statements. And so it's simply something that's out there that may or may not have manifested itself fully by the time those financial statements were published, but they became aware of it between the time the financial statements were closed and the actual reporting or publication of those financial statements. So some of those footnotes that I've mentioned are fairly straightforward, but if you don't know where they are and where to go look for them, and you have to rifle through all of the footnotes, it can be rather cumbersome. But if you go back, just pay attention to those footnotes. They're consistent from one reporting period to the next. They're easy to find. And if there are situations out there that you want a little bit more information on, these will point you in the right direction on that company's financial statements. It will make the review of the financial statements a little more complete for you.